Welcome back to another video. Alibaba just reported their March quarter earnings, and the stock is down another 2% pre-market. We can see it's down by $5 to $214 and some change. And if you're looking at the year chart of Alibaba, you would think that this company is in a revenue decline, but in fact, they reported 64% revenue growth year over year. So we're going to take a little bit of a dive into Alibaba earnings and whether or not this stock is a buy. So yeah, my name's Adam. Welcome to my channel. Before we get into this, please be sure to like this video and subscribe if you enjoy it. And yeah, let's get right into it. So we can see from its peak at $317, it's down by 30%. And if you factor in that like 2%, it's down by 33%-ish from its highs. And again, this decline, you'd expect that revenues are just declining. But in fact, revenues are increasing year over year. This company has a P ratio of 24, a forward P ratio of 19, and they're growing in all segments of the Chinese market, okay? So I think this move is unwarranted, and I'm gonna say flat out that right now I have like a 300 plus price target by the end of year on Alibaba. And I will be buying shares on this dip. And Alibaba is actually my largest position for right now, just because of the very attractive valuation right now. And some could argue that, of course, with Chinese regulators and the growing tensions between the US and China, that Alibaba is not necessarily a good investment. But to that, I would say, I'd rather invest in a very nicely valued company that's growing revenue 64% year over year, the P ratio of 24, than an American company that has a P ratio of like over 100 and is growing as much as Alibaba. So that's just my risk appetite and might not be yours. But again, let's get right into it. Okay, so first we'll go over just this Yahoo Finance article here. And then we'll actually take a look at their quarterly presentation here. Okay, so so Alibaba Group announces March quarter and full fiscal year 2021 results. And first we'll go over just to the juicy bits. So revenue was, we're just gonna go in, revenue was $28 billion, an increase of 64% year over year. So excluding the consolidation of SunArt, our revenue would have grown 40% year over year to 24 million. So annual active consumers on our China retail marketplace was 811 million for the 12 months ended March 31st, an increase of 32 million from the 12 months ended December, so from last year. So mobile monthly active users reached 925 million in March, an increase of 23 million. Okay, so basically in every single place they gain subscribers, they gain revenue, which is of course what I like to see. Loss from operations was actually 1.1 billion due to close to 2.8 billion fine levied by the China State Administration. So the Chinese Communist Party basically slapped Alibaba with a big fine of again 2.8 billion because they said that Alibaba was being anti-monopolistic. Was being monopolistic, and due to their anti-monopoly law, they basically gave them a fine, basically a very big slap on the wrist, saying you can't do this. So they lost money for the first time in a long time, and I think that's the main reason why the stock is down so much. Maybe they weren't expecting such a huge impact on their bottom line. So excluding this one-time impact, our income from operations would have been 1.6 billion, an increase of 48% year over year. So their income would have increased 40% year over year if it wasn't for this one-off fine. So I'm okay with investing in a company because I don't really care about their current quarter results, and I don't really care about what happens from one-time operations. I just care how this company is growing overall. And again, 40% year over year is a really nice number. Adjusted EBITDA increased 18% year over year to 4.5 million. Okay. So net loss was 1.16 billion, primarily due to of course, the fine, et cetera. So diluted loss was 30 cents per share, primarily due to, of course, the fine. And their net cash provided by operating activities was 3.6 billion. Okay, so here, let's just look at the quarterly results. So those were for, so again, okay, so here's the full year results. That was just for the quarter, excuse me. So revenue was $109 billion, an increase of 41% year over year, excluding the consolidation. So yeah, we already talked about that. Annual active consumers for the Alibaba ecosystem reached a milestone of over 1 billion, including 891 million consumers across our China retail marketplace, local consumer services, and digital media and entertainment platforms, and approximately 240 million from customers from outside China. So a lot of people don't know about this. Alibaba is not just used for the Chinese marketplace. So annual active consumers on our China retail marketplace was 811 million, an increase of 85 million from the 12 months ended from a year ago. Again, mobile monthly active users reached 925 million, an increase of 79 billion. And again, you can look about exactly what they did year over year. And income from operations was 13 billion, primarily due to the fine, as well as more due to the increase in share-based compensation expense related to the Ant Group share-based awards granted to our employees. So yeah, again, everything is looking really strong from my opinion. I just see that a lot of people are overreacting to this fine here, and to me, this is just a reason to buy more shares of Alibaba. Okay, so let's just see what they said here. So Alibaba Group Holdings today announced its financial results for the quarter and fiscal year ended March 31st, 2021. So Alibaba achieved a historic milestone of 1 billion annual active consumers globally in fiscal year ended March 2021. Our overall business delivered strong growth on a healthy foundation, with the Alibaba ecosystem generating a record US 1.2 trillion in GMV during this fiscal year. Such achievements were built on top of clear value propositions that we offer to consumers and merchants. We remain very excited about the growth of China's consumption economy, which is benefiting from acceleration of digitalization, in all aspects of life and work. We're going to try that again. Digitalization in all aspects of life and work. We will continue to focus on consumer experience and value creation through innovation as we pursue our mission to make it easy to do business anywhere in the digital era. And again, as what we're seeing is the rise of the Chinese middle class, the rise of digitalization, and to me, that means that Alibaba is at the heart of the change in our economy to being more digital. So I see Alibaba in a very good position. The only thing that could hurt the stock and performance would be, of course, increased US-China tensions and, for example, delisting of Alibaba on the New York Stock Exchange. So we've surpassed our annual revenue guidance by achieving strong organic revenue of 32%. This was driven by robust performance of our core commerce businesses, as well as continued growth of the Alibaba Cloud. I just want to stop here, and I want to say that Alibaba Cloud, at first, when you develop cloud infrastructure, it takes a huge amount of money. But then once it's up and running, it just generates you profits at extremely high margins. So I see Alibaba Cloud actually to be in the future to be a money-making machine. Right now, I think it accounted for 8% of revenue, and I think in the future it could easily account for 20 to 40% of their revenue. Okay, just look at AWS from Amazon. So our adjusted EBITDA grew 25% year over year, while we increased investments in new businesses and key strategic growth areas. For example, they actually invested in electric vehicles, which seems to be all the craze. I'm not sure if that was a great decision, but again, to me, that makes them seem like an innovative and with it company. So where were we? We expect to generate over 930 billion won in revenue fiscal year 2022. Given the market potential and our proven profit and cash flow generation capabilities, we plan to use all of our incremental profits and addition capital in fiscal year 2022 to support our merchants and invest into new businesses and key strategic areas that will help us increase consumer wallet share and penetrate into new addressable markets. Let me just take a drink here. So yeah, let's go over their presentation now. I'm just going to put out key highlights. So those were the key highlights. Again, they missed analyst expectations. If we go back just to here, we can see, excuse me, that their estimate was 1.78, but their actual, in reality, I think they did like 1.52 or something like that. So they missed analyst expectations. But again, I'm not very concerned about this. Because I'm in it for the long term, and they're growing on all fronts. It's not like growth is slowing. So again, they talk about their global ecosystem here, and they what they're doing is they have a new retail strategy, and it's to develop a digital commerce infrastructure that offers an upgraded consumer experience by seamlessly integrating online and offline. Let's just zoom in a little bit. As part of our latest exploration in new retail, we started the community marketplace business in selected regions in China. Our community marketplace is supported by the supply chain's capabilities of Fiscal, Sonar, and other partners. In addition to the 1 hour, half day, same day, and next day delivery options, we now offer community consumers with the option of order today and pick up tomorrow. So again, I like how they're innovating in this space. I think it's relatively crazy to do on-demand delivery in 30 minutes to 1 hour, but I think just because their main consumer marketplace, which of course is so densely packed in terms of population, that they're able to deliver these packages within 30 minutes to 1 hour. But I think that's ridiculous. So cloud, again, this is one of the areas that I'm most excited about for Alibaba. So the post-pandemic world is facing a massive opportunity for industrial digitization. Said it right this time. Cloud infrastructure will eventually replace IT infrastructure, empowering enterprises to achieve digital transformation. So again, they're providing computing, data, and business management services to enterprises. It's very similar to AWS. So again, I really believe in this cloud segment. So yeah, infrastructure as a service, data as a service, all very key words right there. We already went over some of their highlights. This is a chart that I want to spend some time focusing on. So 43% was due, of course, to their core business. They have like Taobao, which is their online retail marketplace, some other retail giants, and we can see their cloud computing right now representing 8%. I think again, as this grows, it'll represent more and more of their their market share and market dominance here. So I think very cool. And again, logistics here 5%, consumer services 5%, wholesale 4%, others 2%. They actually have Ali Health, which is actually really cool. And innovation initiatives and others 1%. But again, very cool. Digital media and entertainment too. So again, you can see that they're expanding into many segments, but of course their key business is still providing products to consumers through retail sales. You can see their cost of revenue. I don't want to spend too much time on this. Talk about their EBITDA and core commerce. Again, 42% increase year over year in revenue. I really like that. But look at this, Alibaba Cloud. This is why I'm so excited. 50% year over year gain in their cloud segment. So revenue from a cloud computing business was $2.5 billion in the quarter ended March, an increase of 37% in the same quarter of 2020, primarily driven by growth in revenue from customers in the internet, public sector, and finance. And again, very cool stuff. And I think that this is amazing here. And I think this will grow tremendously. Digital media entertainment, 7% year over year. So again, not bad, but not incredible. And then they talk about some other income statements. But yeah, I really believe in Alibaba, and I think this is a perfect opportunity to buy some shares of Alibaba. I mean, like, it's at $200. Like, come on, like, how much cheaper can it get? And again, you're looking at a forward PE of under 20, and they're growing revenue by like 40 to 60% year over year. So I really like Alibaba. That's the bottom line. So yeah, be sure to smash the thumbs up button. Leave a comment down below. Let me know if you'll be buying Alibaba. Cheers. Check out my free Discord group down in the link below, as well as if you're Canadian, you can get $10 towards your next trade on a zero commission platform called Wealthsimple. The link is also down below, and you can also support me on Patreon if you would like for my real-time buys and sells. But yeah, cheers, take care, love you all, and until next time, I'll see you.